it's a choppy time in the market. Sentiment's off.
I know, but the economy and earnings still have an enormous tailwind from the fiscal expansion.
Yes.
And the big question is, how long time will that last? And the associated question is, of course, will the fiscal expansion mainly go to buybacks, or will it actually also go to capex? And what this reveals, at least up to this point, that so far so good, and the economics profession is certainly expecting, in the Bloomberg consensus expectations at least, that this will last several more quarters before this starts to fade.
So we had this fear factor midweek this week with Caterpillar's earnings making the suggestion that perhaps Q1 was as good as it gets.
Exactly.
Are you saying by that, no, this quarter is not as good as it gets, and actually this is more sustainable? On the metrics that you talked about there, whether it was capex spending in particular, which has leapt.
That's exactly right, Julia. That's the whole issue, namely, to what degree have we already seen the highest growth rates in capex? And Cat saying that that was maybe the case with a high watermark point is perhaps somewhat worrying. But remember, we're not about to go into any sharp slowdown. We're just rolling off slowly from an incredibly elevated level of growth still. So we're very optimistic that the economy continues to look fine, growth looks fine, and earnings also look fine.
So, Luke, an elevated level of growth. What about an elevated level of valuations? I'm going to put up the so-called Buffett yardstick you're familiar with, which is basically total market cap in the equity markets divided by the GDP. And it's come off just a little bit, but you can see going back to 2013, I mean, we are really at elevated levels. And Warren Buffett would say, you got to watch out whether we're overvalued.
It's very interesting because that's a valuation metric that probably has, along with globalization, it's lost a little bit of its oomph because I don't know if we should be considering the market and earnings power of U.S. companies to just be limited to the U.S. anymore. So the fact that we're able to grow market cap well in excess of GDP is also just really a reflection of how much multinationals have grown. It's the fact that, the Dow punched through a zillion round number milestones last year. So it's a lot about that, I think.
But to what extent the United States still drive global growth? I mean, the globe, particularly Europe right now, is looking to us to drive it more than for them.
I think that's a worry, and that's why when we see that chart and we talk about a high watermark for growth, like Torsten said, maybe we're just eating filet mignon this quarter, and then it's New York strip after. But but it seems like the global economy is still eating steak for a bit, and I think and the U.S. economy is bringing the meat to the table, so to speak.
Okay. Any more meat references you want to make there?
No,
Torsten, weigh in on this.
Way of putting it. I mean, honestly, we are not going low potential GDP growth anytime soon. This is clearly also what the Fed is saying. They want to hike this year. They want to continue hiking next year. The market is a bit skeptical about next year, but it's pretty clear that the Fed sees a very strong tailwind. We also see a strong tailwind from the fiscal expansion. This is not just a first quarter issue and then we start going down. We will continue to see growth being strong for the rest of this year.